bring in Adam Sieminski from Washington. He's the chief energy economist at Deutsche Bank, and Adam is a member of the National Petroleum Council, which is an advisory group to the U.S. Secretary of Energy. Thank you, Adam, for sharing your time with us today on your Wednesday evening. Let's talk about oil prices because, as we mentioned, the market pretty much expecting OPEC to keep production targets unchanged. So why do you think we're going to see prices maybe drop to $60 a barrel near the year end?
Well, we should talk about that. And by the way, good morning to you, Susan and Paul over there in Asia. One of the other things that Minister Naimi said was that the markets were happy. And I think that when markets are happy, they can translate almost any news into something positive. So that drop in imports, which really I think is a drop in demand, well, you could look at that as a positive. The other thing that showed up in those statistics was a 2% increase in gasoline demand in February. That too has got some problems. My 401k is up 50%, but it's still in the hole. And I don't think the 2% increase from last February, when gasoline demand was terrible, is not a huge thing. So let's talk about why oil could be weaker. Look, there's really just three simple points here. First one is a slowing in the industrial inventory cycle that could cause the economy to plateau a bit in the middle of the year. Second point is possibility of tightening by the Fed that would strengthen the dollar. And strong dollar typically is associated with weaker oil prices and gold prices, by the way, as well. And the third point is the overheating in China. The Chinese seem to be trying to put the brakes on their own economy. A third to a half of the oil demand growth in 2010 is coming from China. So if China slows down a little bit, that's going to have an impact.
Hey, Adam, all indications, though, for China this year, yeah, despite the tightening that we might be seeing on the mainland, looks like economic growth might be hitting double digits once again.
Yeah, I mean, it's very strong there. And so I think that what we're going to have to wait for is another couple of months. I think that by the middle of the year, we're going to have a better indication whether these things that we think could cause a bit of a slowdown will really have an impact.
Adam, OPEC also has plans afoot to increase its production capacity by 12 million barrels a day by 2015. That's about the same as Saudi Arabia pumps now. A lot of banks out there are predicting a big jump in oil price over the next few years, but with your comments and that extra capacity suggests there may be too much oil around by then.
Well, one of the places where a lot more oil could probably be coming out is in Iraq. Geologists who've looked at the situation there say that they probably have the same level of oil reserves that Saudi Arabia has. We know the Saudis can produce 11 or 12 million barrels a day if they wanted to, and Iraq, which is only producing 2.5 million barrels a day now, could certainly increase over time. But it's going to be quite a while before they get the companies in there and get the infrastructure really able to do that. I don't think they'll be able to do that by 2015. In the short run, oil markets are still pretty well supplied. There's a lot of spare OPEC capacity. There's lots of spare refining capacity. Inventories are still pretty high, and demand is still relatively weak. All these things are getting better. They're leading towards a tightening in the oil markets, but we're not there yet. So what I'd say is that by 2011 or 2012, we should be back to having oil being sustainable at $80 or $90 a barrel. And that's probably what it really costs to get it out of the ground these days.
And also Nigeria and Angola, they want to increase their own output. They didn't get their way at their last meeting. Do you think they're likely to? Well,
Angola would like to see a higher quota. Nigeria is probably going to be looking for one, too. If they can straighten out the difficulties that they've been having, the violence and interruptions in oil production in the Delta region, their production could go way up. And then in the non-OPEC countries, we've got growth coming in Brazil, probably in Canada, in Kazakhstan and Azerbaijan, maybe India, and even in the United States this year. That'll probably begin to slow down a little bit in 2011. So it's going to be important that those OPEC countries, including Saudi Arabia, Iraq, and Angola, are able to produce more oil as we move out.
Okay, Adam, one more question for you. Let me just ask you about, Saudi Arabia's oil minister calling the price of oil right now beautiful. How beautiful do you think 80 bucks a barrel is?
Well, as I said, if you actually try to figure out what the price of oil has to be in order for the companies to consistently make money in this business and reinvest, the answer to that really isn't too far from $80 a barrel. I just think the economy is a little bit weaker now, and it might not support $80 a barrel as we go out into the second half. You know, one of the really interesting questions for Naimi, Minister Naimi, and he hasn't really answered that yet, is how high a price is too high. Deutsche Bank's economists believe that if prices were to get to $90 or $100 a barrel, that would really begin to have a negative impact on the economy.
Okay, Adam, nice talking to you today. Adam Sieminski of Deutsche Bank. We're going to